It's a big weekend for the financial enrichment of the U.S. political class. You have President Donald Trump announcing his meme coin that has a market value of billions of dollars. That's TRUMP. His wife also got in on the action. That's Melania. She had her own coin and then caused the price of Trump to fall. But it's not just President Trump. You can actually see the excitement, perhaps the grift, on both sides of the aisle, with Honorable Nancy Pelosi disclosing after Friday's market close that she's been very busy in the markets. She's been buying call options in Alphabet, Amazon, selling Apple stock, buying and selling Nvidia. But what really got the market's attention was the announcement that they purchased 50 call options on Tempus AI stock. TEM is the ticker. This was a purchase of between $50,000 and $100,000. This was a levered purchase because it's using the call options and it's well in the money for Tempus. So this does make me wonder, and make a lot of investors wonder, what's going on, because this alone got the animal spirits going for Tempus, causing the stock to jump 30 to 40%. In this video, I'm going to walk you through what are the fundamentals of Tempus. And my goal with this channel is to try to find potential multi-baggers, the types of stocks that can go hundreds or even thousands of percent higher in the years ahead. And I'd argue Tempus does have the fundamentals that could see that type of multi-bagger return over time. And that's what gets me interested. This does not, have just sort of the, hey, this is a meme product and maybe it's worth zero tomorrow. This does have something that might be quite special. And so let's walk through what they're building that could suggest they're building a lot of value over time. Why does Nancy Pelosi, potentially see value in it? And where do I think about the share price from here? As always, you're watching Unrivaled Investing. If you enjoy educational investment content, I do appreciate you hitting that thumbs up, hit that subscribe button. So looking at Tempus, let's explore. TEM is the ticker. So they announced that they're building the leading AI-enabled diagnostic platform in the world. Okay, so what does that even mean? So really, what jumps out to me is that they're potentially building an unrivaled data collection. They have connections with over 2,500 institutions, leading to the collection of real-time clinical, molecular, and imaging data for millions of cancer patients. This is quite interesting. When you're looking at this, it does make me wonder, are they building some sort of moat, some sort of competitive advantage, something that can make them unrivaled, give them the right to win? I've done a previous YouTube video just exploring, what are moats, because Warren Buffett talked about if you have a moat, it sort of gives you the right to win. It's something special that makes it harder for competitors to disrupt your business. And I'd argue this slide suggests that they are building some sort of moat. Maybe it's intangible assets, maybe it's a network effect, because they are connecting to more than 65% of all academic medical centers and more than 50% of oncologists in the US. And as a result, they're getting a lot of data, 8.5 million clinical records, 1.2 million imaging records, hundreds of thousands of DNA and RNA profiles. This is very relevant data as you start having it flow through AI to give you interesting inputs, that could lead to better treatments. Now, when you look at Tempus AI's business model, it comes down to diagnostic testings, or the genomics segment, licensing and analytical tools, that's their data segment, and then their application segment. So you have these three segments. These first two are the vast majority of their revenue. That's genomics and data. The value of genomics, and this is, smart investors have been talking about this for quite some time. It really comes down to testing, where the goal is to test patients, having these diagnostic tests, these assays where you're trying to track, does this person have cancer? Does this person have the genes that makes them predisposed to having cancer? If they have cancer and they're being treated, how is it going? What's the cancer signature suggest? If you've already had the treatment and had a favorable response, okay, are you in some sort of monitoring stage where you're making sure it doesn't flare up again, doesn't start spreading again? So the tracking, the monitoring, the diagnostic segment of this market, this is just critical, because as prudent investors have talked about squeezing, and I'm thinking about Andy Kessler in particular, he wrote a whole book about this, where he talked about squeezing, improving the costs in terms of the healthcare system. Really, it may not come, it's possible, but it may not come from, let's say, radical new treatments of, let's say, stage 4 cancer. Really, you can squeeze a lot of the costs by having much better testing and prevention, catching it at, let's say, stage 1 or before, versus doing a late stage, sort of intervention where there's a lot more complexity, uncertainty, and also there's a lot higher probability that the patient doesn't survive. So this is why it's so important to say, okay, let's have preventative catching, early stage detection. This is just so important. And as you look at the genomics business model, you can see their number of tests has just grown amazingly over the last few years, from 40,000 to over 200,000 from 2019 to 2023. So growing 50% a year. 2024, it's growing closer to 20%. And you can see that not only has the number of tests grown significantly, they've also been able to charge more. The revenue per test has gone from $600 to $1,500, so more than doubling. And so that's the genomics, that's the data, that's the testing segment. But you do have this data segment, which I think could be even more interesting. So when you look at it, it's about licensing libraries of de-identified. So that means you anonymize the patient. You no longer have the exact detail who this person is, but you're taking their data, their clinical, molecular, and imaging data, and providing a suite of analytical tools to pharmacy and biotech companies. And they have 19 of the 20 largest public pharmacy companies licensing their data. They have contracts with these companies that say, hey, this data is so valuable, they're willing to pay over $900 million in the upcoming quarters. So they have contracts, for that to be delivered in the coming quarters. I suggest, this is a clear signal to me. This is a green flag for me. When I see this, when I think about the potential moat that they're building, and then I see the customers, that's like a ding, ding, ding. That's a sign. This is valuable. And customers are saying, this data set might help us refine creating better products that are more tailored to very specific, audiences, to say, okay, this is, with this genetic profile, this is the exact treatment that we need, or this is, this patient profile is more likely to have a favorable or an adverse outcome. And this is also where AI comes in, because you have just so much data. They say, look, you can answer questions in minutes, not months, because you can have AI. And this is one of the strengths of AI, which is to be able to go through just volumes of text and say, okay, here I can pull out all the references to this and say, it may not even say the exact words. It's a context awareness to go through it all and then say, okay, based on all these outcomes, here's where, this patient population, this is the data that can be relevant for you as you're considering new products, to potentially come to market for the pharmaceutical and biotech companies. So you can see why this, it's starting to create a win-win dynamic. And not only do they have a lot of business committed for the next few years, 900 million revenue, to be delivered, but they're also seeing strong retention, 125% plus. So that means their existing customers are paying 25% more. This data is valuable. I'm seeing very clear signal. They're building something special in their data segment. Looking at their financials, growing at a nice clip, around $180 million in the third quarter. So isn't this a pie? This is not a pie in the sky segment. This is not a business that, has no real inherent value. This is not a meme coin. This is a real business growing quickly. 180 million in revenue, of which the vast majority is their genomics or their testing business. That's 116 million versus 96 million. So growing at a reasonable clip, around 20%. But their data and services segment, that grew very significantly from 40 million to 65 million. You can also see the margin profile for genomics is around 50% lower year over year, while data is around 77%. I look at this and I'm thinking to myself, data is going to be really the driver of this business. That would be my hunch, looking at this. And I would suspect the way you dominate over time is you say, look, we perpetually lower the profile, the margin profile on the data, on the testing, the diagnostic testing business, because, then you don't have any sort of friction with, let's say, Congress or, people saying, oh my goodness, these tests cost so much for monitoring. No, that profile just drops more and more over time. So people can use, get these tests done more and more, but then you're generating a lot more data that then can be used in this very profitable, highly, you can see much higher margin profile data segment. So I would expect the bulk of their value will come from their data business over time. We'll see. That's my sort of hunch. You can see it's still a negative EBITDA business, so negative cash flowing business, so unprofitable, but growing quickly. They also announced an acquisition of Ambry Genetics, which is one of the leading labs. They also have, a testing platform with oncology, neurology, and cardiology. And the reason why this acquisition is so important for them is that also it goes back into they're looking to grow their data moat. And so Ambry generates vast amount of data across 400,000 patients. And this also expands, maybe, reinforcing their diagnostic testing mode. It expands their access into new categories such as pediatrics, rare disease, cardiology, reproductive health, and immunology. So I look at this and, once again, this is just an exploratory, perspective on Tempus, but as excited as I am about Tempus, it seems like they're making some clever acquisitions as well with Ambry. And when I see the purchase price, where they say, yeah, this is around $600 million. And initially I go, okay, that sounds like a lot of money. More than half is in cash, which I'd rather see that you're using cash versus stock versus all stock. I don't want to see an all stock deal because then it makes me think, okay, you don't actually care about shareholders. But looking at this, how many companies do you know are trading at 2 times revenue, growing at 25%, are profitable on an EBITDA perspective, profitable on a free cash flow perspective, trading under 2 times? So I would say this is a very interesting deal. There aren't a lot of companies like that. There's a company that I'm personally buying for my own personal portfolio. I've called out to my subscribers that, has similar profile, around 30% growth and around 2-3 times sales. But I'm very aware most companies do not, especially when you have significant, gross margins. And in this case, you have positive free cash flow. So this is, or at least positive EBITDA. So this is quite interesting. They are getting some financing from Ares, and the deal is expected to close in 2025. So I'd say this just adds to the complexity in terms of sizing up Tempus as we think about it. They're expecting around 30% growth, revenue growth for 2024 when they report their full results. You can see that Genomics growing around 30% and data and services growing around 45% in the fourth quarter. And EBITDA is improving, though still negative. However, with the acquisition of Ambry, they are expecting a 75% bump year over year in revenue. So they'll be about $1.23 billion in revenue for 2025. And they do expect to be positive EBITDA, which is quite interesting because, once you get to the positive EBITDA phase, getting closer to that positive free cash flow phase, you're talking about you're controlling your own destiny. You don't have to rely on the capital markets as much, and that significantly de-risks the thesis. So this is another example of, okay, there's real stake here. This isn't just sizzle that I like to see, thinking about it. Okay, so what about their valuation as we think about TEM or Tempus's valuation, the stock? First of all, as always, this is not financial advice. Also, recently, Harish, a premium member of the Unrivaled Investing community, shared the following. This is a direct quote. "The profits I made from just one of your letters has already covered the premium subscription for several years." This follows Matthew, another premium member, saying Netflix, Spotify, and Unrivaled are the only subscriptions I'll never cancel. Seriously, this is an incredible value. If you're looking for compelling ideas, come check out Unrivaled Investing. When I think about my checklist, this checklist really gets rid of 90% plus of the companies. Line management, compelling valuation, obvious growth potential, no blow-up risks, and win-win. When I think about what we've covered so far with Tempus, I think win-win's fairly obvious. If you're able to catch cancer early, $1,500 is potentially a game changer, especially for the medical system. From an insurance perspective, the insurance company would say, wait a second, this is great, as opposed to, let's say, having to spend hundreds of thousands of dollars on a much more complex treatment. So I see win-win. I think for the scope of this video, there's just more work to be done in terms of sizing up the blow-up risks, in terms of could there be some sort of competitor that disrupts one of their tests, or, is there some sort of concentration? So that is something that needs further work, further analysis. The obvious growth potential, look, they're talking about 75% growth next year, talking about how AI, this data set is, clearly, very valuable. So I see diagnostic testing as just a clear win for, how society goes, going forward. And then, lastly, you have compelling valuation, which we'll talk about in just a second, and then aligned management. So we're covering the majority of it, and for the most part, this is doing fairly well. This is I'd say getting a pass, or at least worth further study. So let's talk about compelling valuation. Let's talk about aligned management. Aligned management, that's also fairly easy to see. Yes, the founder, CEO, and chair Eric Lefkofsky, he holds around, honestly kind of sounds like Mike Wazowski. He holds around 40 million shares. He was selling stock in December. But look, 40 million out of, let's say, around 170 million shares, that's a huge interest. And he's the founder. So this does get to the alignment that I want to see. When you have a founder, this is their baby. They want to build it. There's a pride of ownership. When you're a founder, you're a mercenary. The mercenary versus missionary. You're more likely to be a missionary to build something and to, stay up late getting it done versus the hired gun. So I love to see founder driven, huge skin in the game. This is what I like to see. Even if we was selling stock at, lower prices in December, still broadly a huge share ownership. When I think about the valuation, this is a hypothetical framework. Of course, stock price can go way higher, way lower, around $7.5 billion valuation at $45 a share. I'm thinking about what's the revenue look like over the next 5 years, because keep in mind, you have this acquisition, that's a 75% jump. And then it's like, okay, are they growing at 15% in the years ahead or 20%? So overall, that probably gets you to around 2.5, 2.6 billion in revenue potentially. And what's the margin profile for this? The data segment alone has closer to 80% gross margin, but I do suspect the diagnostics could be going lower over time. So this is a bit of uncertainty. What does their margin profile look like? I suspect their debt is going to be higher than what I'm penciling out here in terms of their interest expense because of that Ares financing. I also think, my shares outstanding will probably need a tweak because of this deal. So this is a very, quick sort of back of the envelope thinking about, how does it look right now? But overall, thinking about, just based on very rough, I could understand why investors would say, oh, there is still, even after this jump, this bip, this jump because, this announcement that, Representative Pelosi was buying call options, in the money call options, a levered bet on Tempus, caused the stock to jump 30-40%. I suspect there still is potentially hundreds of percent upside over time. It just really depends on how comfortable are you with saying that this business should be worth 30 to 35 times, or that they will deliver around 30% growth for the next few years. So, yes, the Ambry acquisition does sort of de-risk the growth rate in the immediate term. But I look at this and I say this is definitely going to be one that I'm going to continue to monitor for myself, for my subscribers at Unrivaled Investing, just because this is something, I am looking for those types of AI first companies that, can benefit and can revolutionize, and do things that wasn't possible before. And I think Tempus does have that potential based on taking all this data, analyzing it, and providing valuable insights, and seeing 19 of the 20 largest pharma companies saying, yeah, we want to pay for that. Not only do we want to pay for that, but we're paying more each year. That 125% net retention, 25% more from the existing cohort. So I look at that very interesting. I want to see how things shake up a little bit. I probably need to refine the valuation framework, looking at adding the share count from their acquisition and, what do I think the actual growth rate could be, and looking at their new products. There's a lot of exciting stuff here though. So this is, in my opinion, worth further study. There aren't, most regular viewers know. Oftentimes I'm like, this isn't for me. I'm calling out how this sort of goes through that checklist. This is, you got the alignment, you got the, I'd say in very intriguing valuation. Of course, if they don't execute, if the margins don't end up anywhere near, what I'm penciling out, then the stock price could get, then wouldn't surprise me if the stock falls significantly. So it is worthwhile to understand these dynamics. But from what I'm looking at from my initial checklist, I'm saying, okay, this is quite interesting. So if this video has been helpful for you, I do appreciate you hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing. And by the way, stay away from those meme coins. I don't think they'll do you any good. Thanks for watching.